Good evening, everyone. This is Wayne, and this is the video version of the trade report for Monday, March 19th, 2018. Well, the markets took a big tumble and went flying to the downside today. Volatility spiked higher. The question is, what are we in for tomorrow? Continuation or a reversal to the upside? Stay tuned to find out more. Hello again, everybody. This is Wayne, and we are going to go over what happened in the market today, March 19th, Monday, 2018. But first, we're going to talk about last Friday because, well, I don't do a trade report on Friday. And so we'll do a little review on that. And then we'll talk about the extended session slash overnight session, which starts on Sunday at 3 p.m. Pacific time, and then of course goes all the way until the US regular session open at 6:30 a.m. Pacific time. And I talk about Pacific time because that's the time zone I live in, because I live in Redmond, Washington. Anyway, so this area over here, and let me get my pen all set up here. The area here in white is the 15-minute chart of the S&P futures, and this is Friday right here, this session here. Now, Friday was what we call MOE Friday. That's monthly options expiration Friday. And monthly options expiration is a very special time in the markets because the big money fund managers and institutional investors and those who have a lot invested in the financial markets utilize the monthly options more so, and sometimes exclusively, as opposed to the weekly options, which are more utilized by, well, traders like myself, retail traders, smaller institutions, those who are a little bit more able to be nimble in their trading rather than the big money flow fund managers and institutional investors. So when it's monthly options expiration, a lot of money is flowing into and out of the financial markets, and options and futures options and stock futures all expire on monthly options expiration Friday, and there's a nickname for that, and it's called Quad Witching Friday. Yeah, I know, it's kind of like, huh, where'd that come from? Well, it's a very, very odd time because the market kind of moves in a way that doesn't make sense, and I have learned over the years to just not trade it, and I didn't. And you can see how it pretty much went kind of sideways to lower into the close. It opened, looked like it was going to go higher, then it went sideways for a couple hours, then it kind of went up, then it went down, then it went up again, then it went down into the close. And it was just really, you just can't wait till it's over. Sometimes, and it's a rare occurrence, but periodically the market will give you something you can use. In other words, something you can trade on. It's more the exception than the rule for sure, but we still show up. We still see if there's something there that we can learn. We can kind of every day the market reveals clues to us. I've mentioned that in the past. So we're always looking for things that the market is trying to reveal to us. Last Friday, the markets really didn't reveal much of anything to us. So we went through the motions, showed up, and just saw the market do what it did. The interesting thing about Friday was that the market actually did close higher on Friday, which is what I did call for on Thursday, but it was just a very meh session. But volatility really dropped on Friday. We had a real move lower in volatility, and it almost felt as if it might be the first move toward the markets becoming normalized. In other words, finally making a decision that brings them back to that place where they make a decision to go higher, to begin being accumulated, as opposed to this back and forth, this whipsaw action that we've seen, this two-sided market environment, which is great for trading. But if you want to have longer term positions, it's a little difficult to manage. And there are ways to set up your portfolio to take advantage of that, but these environments are more the exception than the rule. So setting up your entire portfolio to take advantage of two-sided markets in environments like the one we're currently in isn't the best approach if you aren't attending to the markets on a daily basis. So bottom line is Friday was kind of a hands-off day. And then when the market opened yesterday, Sunday, 3 p.m., which is when the futures market opened, it opened a little lower and then went relatively well, I mean, it went lower. I was going to say it went relatively a lot lower, but uh, not really. I mean, it went down, but it really didn't do anything dramatic or traumatic. So I was just thinking, okay, so this market is just kind of dovetailing from Friday, segueing, if you will, and it started going a little bit higher, and then it took a pretty deep dive, and then it corrected a little bit, and then it went sideways to lower for an excruciatingly long time. And by the time it made this move here, which was huge to the downside, I was fast asleep. And I actually didn't wake up till right about here. So I watched the market move down, then move up, then move down, and then move up one more time into the open. And I fully expected the market to drop at the open, which it's done consistently over the last several sessions. And I wasn't surprised. The market dropped, and then it went up, and then it dropped again, and then it went up, and then it started dropping again. And I thought we'd have this back and forth sideways, but then it just didn't stop dropping. And then the thing just totally collapsed. And there was a lot of news over the weekend that came out of Washington. There was also the circumstances surrounding the Russian United Kingdom situation, which is all about the poisoning of a UK citizen. And yeah, we probably know all about that. And then there was some news out of Europe about Facebook. Apparently, they're looking into how Facebook tracks Facebook users in the European Union, and possibly looking at finding that. It was just a really smarmy day today in the market. I mean, it was very difficult to look at anything associated with the trading day and draw any positive positive conclusions from it. Everything was just kind of bad news and looking toward worse news. It was it was kind of an interesting day. Now, dovetailing from monthly options expiration Friday, we call the Monday after monthly options expiration Friday Hangover Monday. And Steve, my trading buddy in the trading room, he did reference that. I want to make sure I give him credit for that, but it is how we assign the energy of Monday. Monday is oftentimes a continuation of Friday after monthly options expiration, but today there were some extra circumstances associated with it that really pulled the price down and just made the market a real downer, literally and figuratively. We got a little bit of a bounce, and then we came back down to test that low, and then we went sideways for about an hour, and then we really went up into the close. Now, this is actually a good sign. And when I say a good sign, what I mean is it was a very positive close. The market did not close positive, but it was a very positive close to the day because it bounced quite a bit off of the low. In fact, if we take a look at the low of the day, which was 26.97 and a quarter, and we look at the close of the session, which was 27.23, that is a very big move up off of the low. Almost, I mean, about a 25-point move. That's almost 250 Dow points up off of the low into the close. So we recovered nicely off of the low in the S&P futures, but we did have a real difficult day overall, as you can see. And real quick, let's just go over first and foremost the VIX. So the VIX, of course, is the measure of volatility as measured by the number of puts versus calls that are purchased in the SPX, which is the S&P cash market. And you can see how volatility just spiked, and that's normal. When the market goes down, the volatility goes higher. And we got a little bit of a recovery, and then it went higher again, and then it went down into the close, which is pretty much the reverse of what I just showed you on the S&P futures. So the VIX tracked the S&P, almost perfectly. So that's a good sign. It means that the markets are working together, and there's no particular clues or anything unusual associated with that relationship. And you can see where the today's candle, this green one with a big wick on top, really went higher and then came back down again. Now, this doesn't necessarily give me any clue as to whether or not we can expect another move to the upside tomorrow. In the VIX, which means we would expect a downside move in the S&P, or vice versa, a downside move in the VIX, which would mean an upside move in the markets, in the S&P, the NASDAQ, the Russell 2000, and the Dow. So at this point, it's a bit of a wait and see game. It's not very simple to evaluate how the market closed, even though it did close off of its lows, which many times, excuse me, many times is an indication that it will move higher the next day. But because of the rather large move that we had today, it doesn't necessarily signify that. Now, if you recall, this is the Dow. This is the Dow Jones Industrial Average. I drew this wedge last week, and I mentioned that this is a perfectly symmetrical wedge, and I wasn't sure if the markets were going to resolve to the upside or the downside. Well, it's pretty obvious that the markets are looking like they want to resolve to the downside. Price has projected itself beyond the lower line of the symmetrical wedge, and that oftentimes means we will get continuation. So this is the first clue that the market is wanting to go lower. Now, it has to have a confirmation, which means tomorrow, if the market goes lower, that's telling me the market wants to go lower and wants to continue to go lower. Now, we do have a bit of a line in the sand here, and that's the low of this candle right here from March 2nd. And that low is 24,217, and the low today was 24,453. So about 230 points difference, 225 points difference. But we closed way off of our lows in the Dow Jones. The Dow was down almost 500 points at one time, and it closed down about 335 points. So it came well off its lows. Still, we have a market that has a bias, if you will, to the downside. Now, if we take a look at the S&P, and that's the alert associated with the S&P. You can see that the S&P is a little bit stronger than the not the NASDAQ, than the Dow. But at the same time, we still have it's a pseudo symmetrical, and you can see that the confluence of the lines, the candle today is perfectly positioned at the confluence, and also, let me get rid of these lines, and also has dipped through the pinch of the Ichimoku cloud. So we have kind of a perfect storm going on in the S&P. So right now, I'm looking at the very real possibility that the S&P may go higher tomorrow, which is totally separate and different from what I just told you about the Dow Jones. So already we have conflicting information, which is the puzzle of the financial markets. We're always looking for something some, some clue, some technical indicator, some way to evaluate the markets in a way that gives us the ability to look at them and come up with an idea of how they will resolve the next day. Because we must have a trade thesis in order to participate in the financial markets as a trader or an investor. Now, this is the NASDAQ, and the NASDAQ is very positive. Now, when I say positive, I mean it has actually begun its resolution to the upside now. However, you can see that today's candle completely traversed the lower trend line of the upper trending wedge. Now this wedge right here is more, I need to continue it. You can see how, this thing really was moving to the upside, but today's action totally threw the entire thing for a loop. So we have a very different dynamic now. And you can see that there's a pinch here as well. Now, with a pinch in the Ichimoku cloud, price moves toward, to, or through. Today it moved toward. I don't know if it's going to move to the cloud or not, but we'll find out tomorrow. So we have tomorrow's trading to give us the rest of the information that we need to know how the markets are actually going to trade tomorrow, or are actually going to trade. So the clues that we have today are incomplete. Now, there is a very important economic piece of economic data that's coming out this week, and it's associated with the FOMC, which is the Fed Open Market Committee meeting. Now, that's where the Fed meets every 6 weeks and makes their decision on interest rates. Now, it's widely held and believed that the Fed will raise interest rates this week by 1/4 point. That's an expectation. Now, if they raise it more than 1/4 point, that is going to freak out the markets and we will go lower. If they announce that they're going to raise interest rates more than 3 times in 2018, that will similarly freak out the market and we will go lower. So the FOMC meeting results occur at 11 a.m. Pacific time on Wednesday this week. So we still have 1.5 more days of trading before we'll have this information. So tomorrow's trade is going to be kind of interesting. It's going to be held in this arena of uncertainty, and the markets do not like uncertainty, so we very well could go lower from the close today as a result of the uncertainty. That being said, we could very easily have another day like Friday, kind of this odd back and forth, not really directional, kind of holding a holding pattern kind of trading day before Wednesday. That's a very real probability. But given the fact that we had such a down day today in the financial markets, momentum and sentiment, I've talked about those two very important elements, always come home to roost. Even if you end up having a market that moved higher into the close, if it had a huge down move for a large part of the day, that only serves to provide a bit of relief for the big down move, but we could ultimately end up having some continuation to the downside tomorrow. And in the extended session already, we're already heading a little bit lower. So there's still, the jury is out dynamic going on here, but at the same time, we have a few things that still need to be resolved, and we won't have the information we need for the markets to really get their groove on and make some decisions about direction until Wednesday afternoon. So, and that's a long time in the financial markets. So really, we're kind of sitting here going, all right, so Friday, monthly options expiration was a kind of a back and forth, not a real big deal kind of day where we actually got a down move in volatility. And then the extended session that opened yesterday, Sunday, associated with all the news out of Washington and the geopolitical stuff and the Facebook news out of the European Union, kind of drove the markets to a big bout of selling today, which recovered into the close. But nothing really got resolved necessarily. So we could have some continuation tomorrow as we're waiting for the Fed announcement on interest rates on Wednesday. So we're in this very uncomfortable, uncertain place in the financial markets. And until we know more, we're still going to have to treat the markets as if they're back and forth, two-sided markets held in this place of uncertainty and, for all intents and purposes, insecurity. A market that's insecure just doesn't really have a directional uh, certainty. So here we are. We'll have to see what happens in the extended session tonight, how the Asian and European sessions trade, and then ultimately how the U.S. regular session opens and we go through it tomorrow. So until then, I bid you good night and good trading.